Hi everyone, trust you're doing well and you're bracing up. Ice Forex to everyone. Keep encouraging yourself, keep learning, keep getting better. Don't give up. The more you keep studying, the more you keep learning, the more you keep getting better. Forex is not easy. Don't let anybody deceive you. Forex requires a lot of skill, patience, and patience, a lot of patience. So if you want to make money from the market, those three things hold them firm: patience, skill, and knowledge. Patience, skill, and knowledge. You need those three. You need to know what you're doing and be skillful. So today I want to show you entry confirmation for all time frames. One of the major reasons why people lose money in the forex market is because they don't understand entry confirmations, and it is entry confirmations that helps you to enter at sniper. So if you want to know how to take trade at sniper, so you need to watch this video to the end. I want to show you how you can take trade at sniper, and then you can confidently use it anytime on any of your trading uh, choice. So all right, now look at this bullish candle. You can see this is a bullish candle. So we take this to be the recent high. Let's take this to be the recent high. I don't intend to make this video long. It's going to be as short as possible. And let's make this recent low. Let's make this the recent low. That's where you have your major work. So this is your recent low. So recent low. Now the market started buying from here and then went up, got here. It closed with the rejection wick. All right, so now before you can say you want to sell at this place, you don't just sell because there's a wick, because the market can decide to close here and come back, do a retest, maybe around the breaker block or other block, and move on. So you need to understand what will happen after this candle is closed. So I'm actually on the 1 hour time frame, and I will show you in the real chart, but understand this first. So what you need to do is that you need to mark the close of that candle, the weak eye of that candle. That's where you need to understand where the operation of the market will go. So now I want you to look at this right now. So when this market closed here, it closed here, right? Now the next candle opened. Now if it's going to buy this candle that opened next, you expected that candle to have something like this go up, because at first when the market closed, you will see a buy. There will be a buy like this. If you see something like this, there will be a buy. This candle that is currently will be a buy, will go up like this. Now before you can take this trade, you want to see that this candle goes up very well, whatever time frame you're using, goes up very well, and closed at least 50 to 60% above the current high. So you expect the market to go like this, then give you a wick. The wick can pierce into this former low. You want to see like this, and this one close above at least 50 to 60% above the recent high. Then you expect that at the opening of a new candle, then you can now buy your trade from here. Again, right now. But now, from what we just, our initial drawing, this market couldn't, the next market opened, but it lost a lot of strength to push above this. So what happened? You can see the market was going, it couldn't push, there was rejection, and after that rejection, what happened? You experienced that there was a rejection, and the candle closed. What you need to notice that the candle closed inside this zone, not above, not like this. If you close a little bit above, it's still okay, except if you close with at least 60 to 70% bullish. But if you closed like this inside this candle, it means that it lacks momentum to buy. So the market closed like this, like this, like this. That means you're already seeing a sign that the market will go to sell again right now. So for you to take the trade, you want to see the candle closed inside the previous high. You must close inside, not above. Inside. If you close inside, then so at the opening of a new, so you mark the close of that candle. So at the opening of the new, which is here, this is where you take your entry. You take your entry at this point, then you allow the market to sell down to this. You allow the market to come. You allow the market to come, keep selling down, sell, sell. What will market do? It will sell, take out liquidity. There are stop losses here. It will take out liquidity at this zone. Then if it continue, if you have a lot of momentum, then you expect that this market will continue to sell, 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 down, 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 down. But if it does not have momentum, it will take liquidity, then it will also close inside. If it close inside the recent low, then at the new candle that formed here, what do? At the new candle that formed from here, you just enter your buy, and then the buy. So we expect that this buy will have a good momentum and close way above. Then the buy continues. So that is how, as a confirmation you need if you want to take a trade at any zone, and you can discover this at the recent candle close. That's where you want to take your trade from. So now let's look at it from the real chart. Let's look at it. I'm on 1 hour time frame. So now let me use this recent high. Today is 10th of September. It's actually my birthday, so I'm actually working. My birthday doesn't stop me from working. So look at this right now. You can do it on 4 hour. You can do it on. So let's look at this current trade now. So look at this high. This is a recent high as far as this market is concerned. This is a recent high here. This is a recent high. This is a recent high. Sorry for that. This is a recent high here. This is a recent high. So you need to mark the recent high. As after this one, this is the next high. So what you're looking for is that you want to see this candle. So when this candle around 10 a.m. Nigerian time, this candle was gaining momentum. If you go to 30 minutes, you see that this candle was a full body candle. But because we're using higher time frame, I always use higher time frame to discover this. So now, because this candle on 1 hour time, if I've been watching it, I use 1 hour to do my analysis, 1 hour, 4 hours to do my analysis, and I take my entry in lower time frame, 5 minutes and 15 minutes precisely. So if you want to get a sniper and sharp entry, use higher time frame, 1 hour, 4 hour to do your confirmation entry. So look at this right now. This candle now, I was watching it. I wanted to know whether I would buy or I would sell from here. So because this is a recent high from this bullish trend. So look at this market. It closed below after it swept liquidity. Remember, there are stop losses here. Every recent high will have liquidity. Every recent high, recent low will always have liquidity. So now it swept it, then the market closed inside, which gave us a perfect sign that this market is going to sell. It closed inside. You can see right now when it closed inside. So I waited for it. So I went to 4 hour time frame, because I wasn't that confident. Because if I was to buy from here right now, maybe my account will have a lot of drawdown. So I went to 4 hour time frame to actually see how it's happening, because since it's 4 hour that controls it. So look at it right now. So 4 hour give me the exact picture that I want. So this is the recent high here. So this market went, swept this liquidity, and I was expecting it. So this market now closed inside this, inside this, not even above this week, inside this. So this gave me a confirmation that this market was going to sell. So I allowed the market to close right here. Then at the opening of this is the opening here on 4-hour time frame. This is the close. This is the close of this. This is the close of this candle here. So this is the close of this candle here. As you can see, it's the close of this candle. So I marked it. So I'll take my trade when market come below that closed market candle closed. So if you now follow it right now, you see the market. This is the next candle open, the sell. So I took my sell from here. I took it on my account, and I'm currently in profit. So right now, market closed here. So this was where I entered. Immediately the market closed, I entered. So this sell. So what I'm expecting right now, I'm expecting this market to come and take this recent low here. This recent low. So the market to come and take this recent low and close below or above. So then that takes the next direction. So what I'm expecting this market now can do something like this. If he's trying, he might also be trying to see if he can close above this. If he cannot close, I will sell further. So I expect the market to do something like this. Try his own best, then close somewhere around here. Then you sell down, take this low, go up again, take this low, then take this finally. So if it closed below this, then I expect that there will be a retouch here, the market will sell. But if it doesn't close there, so I expect the market will move up from here and then sweep all this liquidity, because these are all liquidity here. Sweep everything out, then the market will continue to surge and surge for then targeting this particular high. So it's as simple as that. So I will advise you that you use higher time frame for this confirmation entry. It's everywhere. It's everywhere. Let me show you a bearish trend of such. So let's look at this. Let's take this as our recent low. Okay, let's take this as our recent low. So all you need to do is to mark your recent low. Before this sell happened, this was the recent low. Before this sell finished up here, this is the high of this market, because there's liquidity down here. Hope you are following me. All right. So what you need to do is that you're watching. So you mark this zone. So you want to see what happened. And remember, you also go to your 4-hour time frame to do this actual confirmation. So don't just rely on 1 hour. 1 hour might not give you a complete overview of what is happening. So always use 4 hour to determine the closure of that candle, because what you're seeing on 1 hour might not be what is happening on 4 hour. So now look at this low now. So when this market sold, it swept what? Liquidity. This is so sweet, guys. It swept liquidity. After sweeping liquidity, closed inside. Perfect. See, it closed inside. So all I'm waiting for, I will only take my entry since I've marked it. So I go to my lower time frame, which is 1 hour time frame, to go and see anything that happens above this candle. That's where I'm buying. So you see now when this candle closed, so at the opening of that candle, so I'll take my entry from here. Pim, and look at what happened. Massive move. Massive move right from here. Market did massive move. See, almost 1,000 pips. This is 957 pips. 957 pips. Whooping right from here. Yes, 972 pips that this market did. So you can see now. So you can do this often and make a lot of money. Your stop loss should just be right below here. That's all. The same thing now we're expecting here from where we enter this trade. Expect the market to come here. This is where our stop loss is. So this is so clean and beautiful. So I'll be handing it here. So if you need mentorship and training, send me a DM, then I will get back to you. take time to watch this video over and over again, understand how it works, then you'll be making consistent profit. All right, guys, do your best some other time.